Sorry, it's been a long time since my last video. This is a video on the negative income tax theory, as those of you with good sight probably can figure for yourselves. It is a middle ground between the progressive income tax and the flat tax. The basics. A flat tax is instituted to pay for the expenses of the government. A predetermined amount, such as $10,000, is given to each citizen. Joint filers get double, with 80% of such gained for each independent. No one 18 or over is considered a dependent. This is meant to be completely replace the welfare system, with the exception of Social Security and Medicare, which would have a cutoff date for younger generations. The flat tax is meant to pay for the Social Security and Medicare costs of those that get to that age, but those that are younger will have reduced the tax in order so that because though as they earn money, they will have more money to put towards an individual retirement account or a health savings account or a good insurance plan. Alright, here's some examples. If a person makes $5,000, if the flat tax is, say, a quarter of their income, which is high, but, government pretty much decided to screw us over on its spending plan, both sides, then the person pays $1,250. But receives $10,000, which helps cover the necessities while such a person works to improve their income. A person who makes $40,000 with the same tax would pay $10,000 and get $10,000 back. Thus, they theoretically can live and have a decent plan or health savings account and maybe an IRA. They are also basically unhindered, and they can continue on to earn more money. A person earning $1 million would pay $250,000 and get $10,000 back, meaning they paid $240,000. The basic standard of life is met for every individual in the areas that both sides generally agree on: rent, food, utilities, with freedom for the individuals. There is a greater incentive to work, since while you are guaranteed a certain amount, you can always get more. Expenses can still be paid, and one that I did not put in here is that the welfare trap, where after earning just a certain amount, things that are still beyond welfare programs that are still beyond your income suddenly get cut off. That doesn't happen. You have the money, and it's what you do with it. Cons. Businesses may charge higher prices because of guaranteed income, especially in areas with inadequate competition. If the government continues to expand in its expenditures, it may not work or have to be fixed in a way undesirable to the taxpayers. Disclaimer: this part is strictly my opinion if this is ever adopted. The money would begin being transferred at the age of 18 in approximately 1/2 of the yearly allowance each month. In December, the final payment will reach the cumulative full amount. This keeps it in a steady stream able to be used instead of someone going without a year without the payment or getting it a year early.